And I'm Heather Branch here with Abe asking for his ideas on the things you can be working on now in effort to better prepare for this second phase of your financial life. Thinking about your golden years, all the goals you have for those years. You want to make sure that you have an income plan, a retirement plan in place to help you achieve those goals, which is, of course, what Abe and his team are here to help you figure out. TheRetirementKey.com is where you can find us anytime. We also have links posted in the show notes, so you can just click there, or again, find us at TheRetirementKey.com. All right, so gonna get a little personal. I want to talk about the inner workings of your household between you and Shelly, and just rip the Band-Aid off.
Let's do it.
Are you like me, or is Shelly like me, where we bonded over like the Marie Kondo and the Neat Freaks on Netflix and
that
things
is Shelly.
like that?
That is Shelly.
Yes!
Yep.
That's my girl.
She likes our house to be very organized, very decluttered.
Label makers are my love language.
Tip-top shape. Yes, that's her thing. That's her.
I appreciate
That's
it.
her throne is our house, you know?
All right,
my throne is like the business, you know? So it's really interesting. Like I really take care of this office and the team does too, of course.
Yeah.
But that's kind of my thing. And then Shelly's thing is like the house. And so yes.
She's a nester.
Yes.
And that there tends to be in most relationships, you'll find one person that's like a nester and one person that's like a business person. That's yin and yang. It works. So it makes sense. But even people that are the cleanest, a lot of us have a secret closet or a secret junk space where the clutter accumulates.
Yes.
So can you and Shelly both park comfortably in your garage?
We can. And our garage is
impressive.
it's got stuff in it, but it's nicely put away. We park both cars in the garage every single night, which is nice, and especially when the weather is not great. But it's my understanding that a lot of people can't use their garages for the cars because their garages are loaded with junk.
If you are one of these people, seek solace in knowing that you are not alone, because it turns out a lot of us have a very junked up garage. In fact, a new survey says more than a third of Americans say their garage is so cluttered, it blocks not just one, but any vehicle from entering. We've all seen neighbors like that. Stuff is spilling out. Nearly 2 in 3 people called their garage the junkiest space in their house. But here's the thing. We actually have an expression at Abich Financial. We call it the financial junk drawer, because you've seen it day in, day out. People come to you and they say, okay, here's all my stuff. And they just kind of hand you a pile of papers or a disc full of papers.
All the time.
Help me. The financial junk drawer that has to be made into a retirement plan. Let's talk about how you help folks do that. How do we unpack that?
Yeah, that financial junk drawer, you know, some of y'all's financial junk drawer is more messy than others. Sometimes our prospective clients come in and their stuff is in tip-top shape. They'll come in with binders and they'll bring their laptops in and everything's in reports, and they have all their latest statements, and they've done all these reports on their own as well, and they're on top of it, super on top of it. A lot of engineers are like that. A lot of our engineer clients are like that. Yeah. And it's actually great for us because then we're talking the same language like immediately, and we can kind of just get down to business. And they're like, no, Abe, that number is this number to the T, right? They know exactly what the numbers are, which is it is nice. But then the average American, I would say, and the average person we meet with doesn't, you know, it's not a mess. It's not a financial mess, but think about this. For 30 to 40 years, you've accumulated stuff, financial stuff. 401ks, IRAs, bank accounts, CDs, real estate properties, pensions, Social Security statements, deferred compensation statements, company stock, annuities, maybe even some crypto, savings bonds, treasuries, all this stuff. It can get hard to keep track of all this stuff out there, especially if you're not working with somebody that can help you put it all together, and especially if you're not that engineer type that's super detailed and organized, because not everybody is. It's not really the way my brain works, like automatically. I kind of have.
It's not the way that the world works. I mean, just think about the difference in just one generation. I mean, our parents and grandparents would usually go to work for one company. Nowadays, people come to you and they have worked at 5, 6 companies sometimes over the course of their career.
Correct. Yeah. Yep. So we just had a couple call in and come into the office from Alexandria, Virginia. Well, let me preface that. They both live in Alexandria and Portugal.
Oh, wow.
and are going back and forth between Portugal and
Lovely.
Alexandria. So
Yes.
pretty cool, having a fantastic time in
Yeah.
Portugal. And we're seeing that more and more where clients are, living in other places and then coming back here. Oftentimes it's like here in the area and then Florida, right?
Right. Right.
But this couple in Portugal and then bouncing back and forth between Virginia. And that's why they met with us. Their stuff was everywhere before meeting with us. IRAs, 401ks, brokerage accounts, real estate properties, rental real estate. And they were really looking to put everything together into a well thought out, actionable phase 2 retirement income plan before their move, where they're in Portugal half of the year and then here
Mhm.
half of the year. Because getting together and meeting, while it's doable, they're about 5 to 6 hours ahead of time depending on the time of year. And we actually just recently had a meeting, and it was like 10 a.m. here, and it was like 3 p.m. or 4 p.m. there. And the later you get into the day there, they have more plans, they have dinner plans and things in the evening.
Yeah.
So it's doable, but they knew it would be a lot easier to kind of put everything together before that official move to Portugal.
Okay.
So all of these accounts that were built up and accumulated over the last 30 to 40 years were consolidated for them and put under one financial roof. I can't tell you now, in doing quarterly reviews with this couple, how easy it is for us and them to see, here's all of your accounts. Here's where your income's coming from. Here are the balances in each account. Here's your total balance. Here's how this account's invested. Here's how this account's invested. Here's how this account is doing. Here's a performance. Here's a taxable liability.
Mhm.
It's so easy for people when you're down to maybe 3, 4, 5 main accounts from sometimes 10 to 15. We've
Yeah.
decluttered. We've
Yeah.
consolidated. We've moved everything out of that financial garage. You can pull your car in now and be covered, right? It's a well
Yeah.
thought out, actionable phase 2 retirement plan that puts everything into one place, is cohesive, congruent. You have added peace of mind when you do this, right? You have more confidence. You can stand taller because you do have more confidence, knowing that you've done everything you can do to control all the moving parts in a retirement plan. And so they wanted to do this so they could have more comfort in living abroad, right? While their money is managed here in the United States. And so
Mhm.
so if you're listening right now and you sound like this couple that lives back and forth between Alexandria, Virginia, and Portugal, and you say, you know what, Abe, that's me as well. I might not be moving to Portugal, but I need consolidation. I need a well thought out phase 2 retirement plan. Go to our website, theretirementkey.com, click on the contact us tab at the top of the page, and we can begin to put these same retirement roadmaps in place for you as well.
We also have links posted in the show notes, so you can just click there to go to the website, which is again theretirementkey.com. All right, whether or not you're a neat freak or a pat rack when it comes to your garage, one thing that I think we can all agree upon is the idea of taxes. We feel that we have paid our fair share by the time we get to retirement. We would like to reduce our future obligations. But what's interesting is the pride Mr. Warren Buffett seems to have when it comes to paying taxes, at least in the way of his company, saying that it pays its fair share of taxes. Here is what he told shareholders recently at the Berkshire Hathaway annual meeting.
If we send in a check like we did last year, we sent in over $5 billion to the U.S. federal government. And if 800 other companies had done the same thing, no other person in the United States would have had to pay a dime of federal taxes, whether income taxes, no Social Security taxes, no estate taxes. Now, it doesn't bother me in the least to write that check.
This sounds nice. Doesn't bother him in the least because he himself is a billionaire. So he
Correct.
has less burdens to worry about, Abe. So thinking about the rest of us, it falls on us not to overpay in taxes.
Mhm.
And so how do you help folks figure out what they have to pay versus what they can perhaps keep instead?
Yeah, it's a great question, Heather. And look, if Warren Buffett's shelling out $5 billion in taxes, then that means he's done really, really well. And I wish I could shell out $5 billion in
Right.
taxes, and I'd be saying the same thing. Well, you know what?
Sure.
I'm glad I paid the U.S. government $5 billion in tax. And that's because you made a lot more, probably made a lot more than $5 billion.
Hopefully.
Especially in the last couple of years with the markets just flying high and hitting new all-time highs. So look, we're not Warren Buffett's here. None of our clients have won the lottery. All of our clients have worked hard for 20 to 40 plus years to accumulate usually $1 million to $3 million, $5 million, sometimes 5 to 10, sometimes less than $1 million. It really just depends on someone's situation. And usually that amount of money saved is enough to have someone retire with dignity and confidence. But we've got to watch out for the risks, the huge risks that can mess up a sound and great accumulation plan, a great amount of money saved, especially if we've saved all that money in pre-tax accounts. Then the tax code changes, tax brackets change, which are scheduled to into the near future. You look at our company's financial situation, $35 trillion of national debt, and most people would bet and argue that in the future taxes would be higher. So if we've just compounded and deferred all this money in TSPs and 401ks to a future date when taxes could and probably will be higher, to what degree are we paying more than our fair share then? We could be. We could be. We just had a couple come in to the office from Fairfax Station, Virginia, with nearly $3 million in pre-tax accounts.
Wow.
Lots of gain in brokerage accounts as well. They're selling a house. All of these situations can make for a tax challenge, right? A big tax challenge. Well, if I've got a lot of income, then I got $3 million on top of it, Abe, and I'm looking to take out money for retirement income, yet I've got a lot of gain in some of my accounts. I also need to sell a house. Man, there needs to be some tax strategy there.
Yeah.
You can't just or shouldn't just do things on a whim and hope that next April everything works out. Otherwise, you could be in for a huge surprise. So these situations arise all the time. And while we're not real estate agents or attorneys or mortgage professionals, we can't give you advice on what to list your house for and when to sell it. But we can talk through financially when it might make sense to do that based on your tax situation, right? And your real estate agent can help you with the time of year and what to list it for and all these things. We can also talk through our clients, which we did with this couple, on maybe how much money to put down on a new house, right? With mortgage interest rates hovering around 7% currently.
Right.
You know, people ask all the time, should we just pay off our new house in full, our forever house in full? Should we take out a baby mortgage? You know, it really depends on a lot of situations, especially current interest rates.
Yeah.
So, but when it comes to retirement accounts, we can make recommendations. We can give guidance on, hey, maybe you should consider $50,000, $100,000 and moving those from pre-tax accounts into Roths, because maybe this is a great year for you to do it and you have a lot of room in your current tax bracket to do so. These are all situations we talk through with our clients. It's so helpful to have a financial and retirement planner to do that.
Yeah.
So if you sound like this couple from Fairfax Station, Virginia, you say, you know what, Abe, we've got a lot of decisions coming down the pike. We could definitely use some tax guidance. We definitely could use some help when it comes to making sure we're paying our fair share, but not anymore. You need tax strategy. You need a tax action plan. Go to the retirementkey.com, our website. Click on the Contact Us tab at the top of the page, and we can begin to talk about taxes and put those reports together for you as well.
We also have links posted in the show notes, so you can just click there to begin the conversation with Abe and his team at Abich Financial Services, or again, visit us anytime at theretirementkey.com.